Hello again. In this video, we will be talking about trend lines. To start, levels of support and resistance do not only occur on a horizontal basis. The way that we identified levels in the previous video on support and resistances used simple horizontal levels that were used to depict where price is likely to reject at. However, this is not always the case. These levels may appear along a diagonal line, such as they do in a trending market. Support and resistance levels that appear along a diagonal line can be referred to as trend supports and trend resistances. Notice how this diagonal line here on this chart acts as a very strong support for an overall uptrend. Now, trend lines have two primary uses. The first one is to identify the range that a trending market follows, which is what we're going to go over in this video, and also they can be used to identify chart patterns, which we will go over in future videos. But anyway, in a trending market, trend levels of support and resistance assist a trader in identifying where to go long or where to go short during a correctional move, depending if the trend is bullish or bearish. For instance, during a bullish market, a trend level of support will be used to identify where a trader can look to go long or buy an asset during a pullback. Likewise, if it were to be a bearish market, a trend level of resistance would be used to identify where a trader can look to go short or sell an asset during a pullback. A trend line follows the same rules as horizontal levels of support and resistance. This time, however, you are plotting a line along the lows or high of price in a diagonal fashion. So, using the two-touch rule for trend lines would mean identifying two lows or highs during a trending market and using those levels to construct a trend line that follows price. Take a look at this trend line that we have already identified here by connecting the lows along a diagonal basis. Notice we have a low here that connects with this second low here. Apply the two-touch rule, connect those and extend forward rightward. And notice next time that it came to this level, it ended up bouncing off of here. Also, notice how this trend level of support has not really any price action occurring below it. The same way that horizontal levels of support and resistance work, where they act as guides rather than exact levels, the same thing applies for diagonal levels of support and resistance. Notice this level is pretty much a guide. We'll get a wick extend beneath it here and there, but overall, this guide acts as a strong level of trend support where we can look to take long positions whenever we approach this level. So if we're going to go forward and take a look, notice what happens the next time it approaches this level. We get a nice bounce off of it as well. And there's no price action occurring below it. For if there are price action occurring below it, we would use those lows to identify the trend line. Now take a look at this trend here. Since this is a downtrend, we would be looking to use a trend level of resistance that can be constructed by connecting the highs of the trend, kind of like what I'm doing here. I would go ahead and start, create the trend line. Notice how we're connecting the different highs using that same two-touch rule. And if we go ahead and watch as price reattest this level, we'll see that price actually did end up rejecting the next time it appeared and touched this level, where a short position could be established and taking profit on the lower end of that move. And same thing applies here, guys. These lines are not exact levels as to where the price is going to reject. Notice we might get a wick above here and here, but they just act as guides for assisting a trader in identifying where to go short or sell a position during a downtrend. A good trick to identify where price is likely to bounce off of is to look for overlapping levels of horizontal and diagonal levels of support and resistance. Take a look at this chart here. We have identified a lower bound for this trend by using the two-touch rule, connecting these two lows down here. Now this time, if we go ahead and add a horizontal level of support for where this next touch is likely to go ahead and bounce off of, what we can do is apply the same rule that we used before and apply that two-touch rule. And say if we go ahead and identify a horizontal level of support, kind of like what we're doing here, where we have a support over here, a resistance right here along that same level, and then it went ahead and acted as a support right here. Well, if price is to come down into this region, we'd be looking for this to act as a very strong level of support. So this region right here can be used as a buying opportunity to establish a long position as it can be deemed as a very strong level of support due to the fact that there are two overlapping levels at this point. The rationale behind the strength of this level being deemed as strong is due to the fact that instead of price having to break through only one singular horizontal level of support to hold it up, there's also a trend support that it would have to simultaneously break through if it wanted to continue downward. This is going to make it very difficult for price to break through this level, and rather, these overlapping levels make it very likely that price rejects here and continues back to the upside, giving a trader an excellent opportunity to capitalize on an upside move. So if I go ahead and play this out, notice that when price actually did come to this level, it saw a very strong rejection. And remember, it's not going to be an exact level, just a guide as to where you should look to take a long opportunity. But notice this red candlestick wick, it not only extended to the trend level of support, but it also bounced off of this horizontal support as well, since there were the two levels of support working in tandem to keep the price of the asset up. As we continue this out, it actually did end up touching this trend level of support once again before seeing a clean move to the upside. Now, this concept also works the same during downtrending markets, where if a trend resistance is overlapping with a horizontal level resistance at a particular point, it is very likely that price rejects off of that level and continues moving downward, giving a trader an excellent opportunity to capitalize on a downside move. So this time we have already identified our trend level of resistance. Now, if we go ahead and add a horizontal level of resistance using that two-touch rule, notice if I go ahead and identify a line right here where we have an acting support right here that turns into a resistance, we can look for these overlapping levels over here to identify a short position for this move. Now, the reason why we would look to enter a short position here is because if price wanted to move to the upside, it would have to not only break through this horizontal level of resistance, but it would also have to break the trend resistance simultaneously at this level. So if I go ahead and play this out, you'll notice that right at the intersection of this horizontal level of resistance and this trend level of resistance, we see a rejection that occurred where a very strong move to the downside occurred, where a trader can look to capitalize on that move. Once again, guys, these lines are just acting as guides. Notice here, we have a bit of a wick touch above it, same thing here, but overall, these lines should just be used as guides to assist you in the general area for where a rejection is likely to occur. Of course, when you get these overlapping levels like this, it's going to be very difficult for a price to break back upward, so a short opportunity can be taken here, especially when you pair it with the price action of the move leading into the overlapping levels, as if there are signs of a reversal occurring, which we'll go over in future videos, then that just adds further confirmation to go ahead and take a short position there. However, guys, it is important to note that if price does break through these overlapping levels, let's say if price did move above here, that means that there would be a lot of strength at that particular point in time that caused both levels to be broken simultaneously. And what this means for the price of the asset is that not only did it break through a horizontal level of support or resistance, but it also broke through a trend level as well. When that is to occur, that is a general indication that price is strong enough in the opposite direction to cause an end to a trending market, and there is likely to be a consolidation period or a reversal that follows. So let's go ahead and take a look at an example of this. In this chart here, we have a clear downtrending market where we have a trend level of resistance that we identified using the two-touch rule, where we have a touch here, a second touch here, and even a third touch over here. Let's go ahead and tack on a horizontal level of resistance for if price is actually going to go ahead and retest this level somewhere in this region. Well, if we go ahead and do that and say identify a horizontal level of support that is acting over here, and then it turns into horizontal level of resistance over here, well, now we have just identified overlapping levels of trend resistance and a horizontal resistance. So if price ends up coming to this level, it would generally be a strong indication of a move to the downside. But if it does end up breaking through this level, that means there was a lot of strength at this point, and there's likely to be momentum that occurs to the upside. So let's go ahead and play this out and see what happens. As we can see, we actually did end up breaking above this level where it found support bounced off of this level, and now we would be either looking for a consolidation to occur or a lot of strength to the upside. As we continue to play this out, you'll notice that this move actually did see a lot of strength to the upside, and there was a very clean move where a trader could capitalize on a reversal play this time with a move through this level. Same thing that goes as last time. To take a short position here, you would be looking for signs of reversal at this level through chart patterns or price action in general. And we're going to go through how to do that in the future. But if we were to see signs of continuation through the level, which we'll also go over how to do in future videos, then a long position could be looking to be taken on a breakout and a retest of this level, kind of like what we're seeing here where a clean move to the upside followed. But in general, guys, these trend lines are very useful for traders as not only do they allow you to identify trends, but they allow you to identify where break and trends occur, similarly to how we saw here. Now, although just because a trend support is to break, this does not always mean that price is going to simply reverse to the upside and see a clean move like we saw here. Sometimes after a break of a trend line, price may be simply undergoing a consolidation or accumulation period before making either a further continuation or a reversal to the opposite direction. Now, this will of course be seen in the future videos that we go over the different chart patterns. But anyway, that'll conclude this video on trend lines. In the next video, we will be going over an effective way to identify trends.